Welcome to The Explainer. Today we're diving into a stock, Mask, that has just seen a massive price explosion on absolutely huge volume. So the big question is this the beginning of a real comeback or is it just a trap? Let's break it all down.
The entire story for this stock right now really boils down to this one question. After a pretty long and painful downtrend, we're seeing this incredible, explosive move to the upside. So is this a genuine reversal? Or is it what traders call a fakeout? Basically, a trap to suck in hopeful buyers right before the price comes crashing back down.
To get a handle on where this stock might actually be going, we first have to understand the two very powerful and very opposite forces that are at play right this second.
And this slide really nails the central conflict here. On one side, you've got this super powerful short-term bull run, where buyers have completely taken charge. But on the other side, that rally is fighting against a much larger long-term bearish trend. It's a classic tug of war.
It all revolves around this one price, 41 cents. Now, if you're a bull, this is fantastic news, right? Because it's way above the recent averages. But if you're a bear, you're looking at this and thinking, yeah, but that price is still miles below the long-term highs. And that's the core of the problem we've got to dig into.
Okay, so first, let's make the case for the bulls. Let's look at the pretty overwhelming evidence that something has changed. Why are so many people suddenly getting excited about this stock?
First off, just look at that trading volume. Over 204 million shares. To put that in perspective, that's way more than its average daily volume. This isn't some quiet, subtle move. This is a stampede of interest, and it shows there's some real conviction behind these buyers.
Next up, we've got something called the Money Flow Index. You can basically think of it as a gauge for buying and selling pressure. Well, right now, that gauge is at 99.72 out of 100. A score that high is incredibly rare. It's basically signaling that a tidal wave of cash just poured into this stock.
And the case for the bulls gets even stronger when you look at these other momentum indicators. Now, we don't need to get bogged down on the technical details here, but what they're all saying is pretty much the same thing. The strength of this new uptrend is at its absolute maximum, and the short-term buying momentum is just completely off the charts. The entire dashboard is flashing bright green for the bulls right now.
But, and this is a big but, before anyone gets too carried away, let's flip over to the other side of the story. We have to look at the long-term headwinds this stock is facing, because this is where the caution really starts to creep in.
This chart illustrates the bear's main argument perfectly. I mean, look at that. Despite that incredible rally we just saw, the current price is completely dwarfed by its 200-day moving average, which is way up at $1.71. That huge gap, well, that's the mountain the bulls have to climb to prove this is a real, sustainable change in trend.
And just a real quick definition so we're all on the same page. Think of moving averages as the stock's long-term memory. They filter out all the crazy day-to-day noise to show you the real underlying trend. And for Mask, right now, that long-term memory is still pointing firmly down.
And other long-term indicators are backing this up. For instance, the price is over 33% below its volume-weighted average price. All that means is that the average trader who bought in recently is actually losing money right now. So to put it simply, from that bigger long-term picture, this stock is still underwater.
So with the bulls and the bears in this clear standoff, where do we look for clues? Well, the answer is in these key price levels. This is the battlefield where this whole thing will be won or lost.
The battlefield is all laid out. That pivot point, the middle of the fight, is sitting around 49 cents. Now for the bulls to really declare victory, they have to break through that enemy line up at 58 cents. But if they fail, the bears are very likely going to push them all the way back to their last line of defense at 31 cents.
Okay, so after weighing all of this evidence, the incredible short-term surge against that really heavy long-term downtrend, what's the final conclusion from this analysis?
The verdict is, well, it's a split decision. You have this powerful, short-term bullish rally that's fighting for its life inside a dominant, long-term bearish trend. The momentum right now is undeniable, but it is so crucial to remember that it's pushing against a much larger and much stronger force.
The source analysis actually ends with a direct warning. It advises caution regarding the sustainability of this sharp spike. And that's just a key reminder that these incredible bursts of momentum don't always last, especially when the bigger picture still looks pretty bearish.
So we really end up right back where we started, with a huge battle between short-term excitement and long-term reality. The bulls and the bears are locked in a fight at these critical levels, and the question is, which side is going to break first? Is this a breakout, or is it a fakeout? The charts are going to give us the answer very soon.